Strides Pharma. Let me welcome on board the management. Arun Kumar, Executive Chairperson and MD at Strides Pharma, joins in on the show right now. Arun, hi, good morning. Good to have you on ET now. And looks like your company is on track to deliver what you guys earlier promised. Get off some asset, reduce debt, and get OneSource separated as well. So suffice to say, would it be a fair assumption that you will stick by with your FY24 EBITDA guidance and net debt to EBITDA target of less than 3x?
Yeah, hi, morning, and thanks for having me, Aisha. Good to talk to you. First of all, conclusively, we have turned around the operations of the company post-COVID. So that's been a good outcome. And we have reiterated our guidance or outlook that we laid out in the beginning of the year. H1, we are on track to meet all those parameters. So we are comfortable in not only confirming that our guidance will be met, but in the case of EBITDA, we have moved it now to the upper end of the range.
Okay. Can you give me a sense of what is happening to the US generic market in terms of the pricing trend? Because that's been very hard to call for anybody.
Yeah, you're right, Nicole. But basically, we do have a slightly differentiated portfolio that we operate in the US, and that obviously constrains the size of our business in the US, but it does allow us the discipline that we need to achieve in terms of a margin profile. We do see one-off price challenges, but we do have a very large range of products that kind of supports our continued growth in the US. But having said that, price erosion is not completely gone off the US market. It continues to be a challenge, but it is a lot more rational these days, both from the payers and the supply group. So we see some level of, there was no more irrational exuberance on price, but clearly there is some rational views on how pricing has to be achieved in the US to maintain the kind of compliance levels and costs to manage that business.
When I speak to analysts, when I speak to some of your peers, I get this following sense that, okay, pharma, very few companies have debt. And Strides is one of them which actually has debt. If business is looking so strong, could you be looking at using your cash flows and start retiring your debt? Because then automatically your P multiple, your enterprise value, everything changes.
No, true. So, the peer group obviously has a very significant domestic business, which by default generates significant amount of free cash. Strides is a pure play export business. We grew our business in the last 3 to 4 years through acquisition, which obviously was done through debt. But since the last 12 months, we have set ourselves to reduce debt by over about 1,000 crores. We are on track to achieve that. We are meeting a guidance of under 3 times. We do not have any large long-term debts except for working capital. The pharmaceutical business has got a fairly long working capital cycle time. And with our guidance to be achieved for under 3, we are in a very comfortable situation. And as you suggested correctly, and also in our earnings call yesterday, our focus is to further reduce this. And we believe that in the next 12 to 16 months, this will further come down by another 500-600 crores from the free cash generation that we are delivering. Our goal is to be debt-free in the next 3 years, and I think we can achieve that.
Tell me, when is the likely launch of Vaseppa, and how do you see this drug contributing to your overall numbers?
So Aisha, Strides had a boutique portfolio of very small products, niche products where there was limited Indian competition. We obviously, post the Endo acquisition of the power facility and portfolio, we have upped that ante in terms of size. Vaseppa is one of the first of the many products that we have filed and in the process of approvals, various other products, which will kind of take that size significantly higher than the $6-7 million average per product to now in the $15 to $20 million average. So to answer your point, we expect Vaseppa to be launched this month. And in this quarter, we expect it to achieve it is constrained by supply chain and raw material availability. We do not have that challenge. So we expect that to be a nice outcome for us. And we have several more products in that range coming through in the next several months.
Okay, so morning, I wanted to understand as well how big the opportunities lie with GLP-1 contract business and what exactly is the plan here?
So GLP is part of OneSource, which is a CDMO division, which is in Stelis, an associate company of Strides. We currently have a very significant position with all the three GLPs that are currently commercial. Of course, they are constrained by patents and freedom to operate in various markets. We expect our partners to be in a position to commercialize the first GLPs as early as next financial year. At this time, we have a full order book, which takes 100% of our capacity in our drug device products division. But as you know, that there are several patents and litigations our partners need to overcome before we can become commercial on those products. Having said that, we have a marquee list of customers. Almost every key player in the global market is producing the product with us because there are very few players globally that have FDA-approved drug device combinations. So yeah, we're very excited about it, but it will be a slow start in FY25, and it'll reach its peak in 27 to 30 in that range.
And in the biologics business, I know there's businesses just starting out, but if you take slightly a little longer time frame, how do you look at the business evolving over the next 3 to 5 years?
So when we announced OneSource in the last quarter, we said that our order book will ensure that we hit $400 million of CDMO revenues in our biologics and specialty pharma division by FY27. We are on track to get there.
Thanks so much for taking time out and joining in and sharing with us the business outlook. So debt will come down over the next 12 to 16 months, net debt free in the next 3 years. There has been a positive turnaround as well. And the higher range of EBITDA is what they are targeting.